So today we're going to talk about a financial revolution that's happening right under our noses. It's this quiet giant that's completely reshaping how we all invest. We're talking about the exchange traded fund, or ETF, and its growth has been nothing short of explosive. Let's get into it. Okay, let's just start with this one number, $12.5 trillion. Let that sink in for a second. That is the record-breaking amount of money now being managed in ETFs across the globe. To put that into perspective, that's larger than the entire economy of any country on the planet except for the US and China. And the truly stunning part, this might just be the warm-up act. So you have to ask, right? What's fueling this fire? Why has this particular investment tool suddenly become such a financial juggernaut? Well, that's exactly what we're here to figure out. All right, so before we dive into the why, let's just do a quick refresher on the what. Think of an ETF as a basket. And inside that basket, you've got all sorts of different assets. Stocks, bonds, commodities, you name it. The cool part is, you can buy or sell that entire basket on a stock exchange, just as easily as you'd buy a single share of a company. And that simple, elegant structure, well, that's the key to all its power. Okay, so let's get to the heart of it. This whole boom isn't a story about one single thing. It's more like a perfect storm, a really powerful combination of forces that all came together at just the right time to fuel this incredible growth. So what makes them so attractive? Well, it boils down to this powerful cocktail of benefits. For you, the investor, they're often cheaper and more tax efficient than older types of funds. You also get transparency. You always know exactly what you own. Plus, with all the digital trading platforms out there, they're incredibly easy to buy and sell, which gives you a ton of flexibility. And crucially, they offer instant diversification, spreading your risk across many assets in a single click. And this comparison really gets to the core of the disruption. When you put them up against traditional mutual funds, ETFs often win on cost. But the real game changer is the flexibility. You can trade an ETF all day long, reacting to the market in real time. A mutual fund, nope. You're locked in until they calculate the price at the end of the day. That difference in speed and agility is a huge part of the appeal. Now here's where it gets really unusual. As Hugh Morris from Z/Yen points out, you have two very different groups of investors. We're talking about everyday people and massive institutions all rushing into the very same product at the same time. That kind of dual-source demand creates this powerful feedback loop, pouring even more fuel on the fire. And make no mistake, this isn't just a story about Wall Street. Not even close. The ETF boom has gone completely global, and the appetite for these products is spreading like wildfire. This chart right here really illustrates just how much room there is to grow. Let's just look at one highly specialized little corner of the debt market, ETFs that track complex corporate loans. In the US, adoption is still tiny, at just 3%. But in Europe, it's barely even on the map at 0.2%. That huge gap shows you just how much potential is out there as the rest of the world starts to catch up. And that catch-up is already happening. We're seeing a huge surge in demand from Europe, Asia, Latin America, and the Middle East. It seems investors everywhere are realizing they can use this simple ETF structure to tap into complex markets that were once pretty much off-limits. When you have a $12.5 trillion prize sitting on the table, you can bet the competition is going to be fierce. So let's take a look at the giants battling it out for a piece of that pie. To really understand the scale, just look at the two titans of the industry. In a single recent period, BlackRock pulled in $3.5 billion, with Vanguard right on their heels at $2.4 billion. And you know, this intense rivalry is fantastic news for investors, because it forces them to keep innovating and, most importantly, to keep cutting their fees. So, we've covered the explosive growth, the global spread, and the fierce competition. But believe me, this story is far from over. So what's next on the road ahead for ETFs? Well, the next waves of growth are already starting to form. We're seeing a surge in really niche ETFs for pretty much everything, from green bonds to crypto. There's a massive opportunity in emerging market debt, where the transparency that ETFs bring is desperately needed. And then there's maybe the biggest prize of all, the colossal corporate bond market, which is still just beginning to be reshaped by this ETF revolution. You know, when you boil it all down, the story of the ETF is a story of access. It's about taking complex, once exclusive investment strategies and making them cheaper, clearer, and available to everyone. It is, simply put, a democratizing force in finance, which leaves us with one final fascinating question. What part of finance will they democratize next?